howdy there, folks. This video I am looking very forward to recording for you guys here today. So what I'm about to explain to you is why I'm the most heavily invested in the market right now that I've been since December of 2018. What does that mean? That means I have the most capital allocated towards stocks as a percent of my investable money that I've had since December of 2018. Now, this is a huge deal because that basically means I'm ultra bullish on certain things that are going to transpire in the market, certain stocks and certain stories, right? Because I don't usually go that heavy into the market unless I am really fully on board, right? And so in this video, why I'm looking so forward to this is kind of explaining my reasoning going into all this and the thought process I have across the board. And what you're going to find is, every single thing I take into account. I consider everything on the table at all times when I'm investing. That could mean nukes going off. That could mean literally anything. Once in a 100-year pandemics, I always consider everything, and I always weigh my risk reward. And right now I think it's definitely a time where the reward is pretty immense compared to the levels of risk. So yeah, hope you guys enjoy this as always. Alrighty, so first off, I want to get started here. We're looking at the Russell 2000. So this has had a massive pull down. Russell, which think of the Russell as basically small cap stocks. Small cap stocks have gotten absolutely decimated in the market. A lot of 2021, the small caps got decimated, but specifically over the past about 4 months, these stocks got hammered, right? Russell peaked out at, 24 and some change, and then it hit bear market territory of around 1900. Then we dropped under 1900. So multiple times the Russells hit bear market territory recently. Now, this doesn't happen very often, and when it does, it's a huge buy the dip opportunity because you don't get many times that the Russell just goes into bear market, and every single time it ever goes into bear market, it's a huge buy the dip opportunity. And so right now we're looking at a Russell that's just been, hammered. And obviously, I've been buying a lot of small cap stocks very heavily because this is just, one of the best opportunities I've seen in the market in the 14 years I've been doing this, okay? Now, if we look at the VIX, meanwhile, the VIX has gone beast mode. This is year-to-date VIX, so basically we're a little over 2 months into the year now. And if you pull up a year-to-date for the VIX has gone crazy high, which think of the VIX as volatility. Think of the VIX as kind of almost like a fear barometer for the most part. A lot of trading activity, people getting scared, and just a lot of volatility in the market, right? And right now, we're in one of those time periods we're going through. Now, what we know is every single time the VIX goes insane, it is ready for it? It's nothing short of an extraordinary buy the dip opportunity. Every single time I've ever seen the VIX go to 30, 35, 40, that is when you need to be buying stocks. Every single time, that's how it plays out. And it doesn't mean you're absolutely at the bottom of a market at a particular time or a bottom on a particular stock or something like that. But every single time you see the VIX go to 30 plus, it's a huge buy the dip opportunity. What we're looking at now is this is a VIX over the past 5 years, volatility index, okay? And, I just did some kind of yellow lines across at 5, at 15, at 25, at 35. And basically, if you're under 10 on the VIX right here, you're really in like an insanely low volatility market where there's just not a lot of action going on. And it's actually pretty sleepy market. And you get into those sort of markets sometimes, and there's very much a possibility that in 2023 we could actually, believe it or not, get into a very sleepy market. Potentially, it's not a for sure. A lot can transpire between now and then, but what usually happens is you get a huge time period of volatility where things go crazy, and then you get these kind of sleepy time periods where the market starts to chill out and market will kind of just grind higher, but there's really not much action out there in terms of huge moves in the market. It's not like, oh my gosh, the market just went down 3%. Oh my gosh, it just went up 3%. Oh my gosh, it just went down 3%. Oh my gosh, it just went up 3%. Right now we've been in that sort of market and been in this market for a while, but eventually this is going to tame way down and we'll get into more normal areas. A 15 range, you're in a normal market. You should usually be around a 15 roughly. A 25 is considered high for the VIX. A 35 plus is insane high, and that's where we've been at recently. And like I said, every single time you go over 30, and especially every time you go over 35, huge buy the dip opportunity. Buy the dip opportunity, a massive buy the dip opportunity in late 2018. Obviously, during Rona crash, massive buy the dip opportunity. The VIX just went insane during that time period, right? Like that's I want to call it once in a lifetime VIX move there, but definitely like that only happens maybe once a decade or once every couple decades that VIX goes that insane. But every single time the VIX goes beast mode, it's a huge buy the dip opportunity, especially when you start going over 35 on the VIX. Okay, so right there, there's some good reasons. Also, right now, we got extremely negative sentiment on the market. Now, a conventional thinker would say, okay, sentiment's very negative on the market over the next 6 months, so I want to stay out of the market. Well, I'm not a sentiment thinker. I'm a contrarian, right? I'm not going to think with the consensus. I'm a contrarian, so I'm going to always go opposite of usually whatever everybody else is doing at a particular time, whatever everybody else is thinking. So if the sentiment is insane bullish, right, then I'm going to likely pull back from buying stocks. I might put my money in what's considered safer stocks, maybe dividend plays, value plays. I might just not buy stocks at a particular time and just hold my positions. But that's like I usually do. Like I'm a contrarian, so I'm gonna think opposite of whatever the market's thinking. So recently, there's 54% of investors roughly are bearish on the market over the next 6 months, which is an insanely high number. Usually you're at about 30%, which is what you should expect. If you start getting down to like a 20% number bearish, be a little worried. If you get under 20%, be very, very worried. That's all I'll say about that. But when you're talking about 54%, me as a contrarian, I love that. That just means there's a ton of people that have extremely low expectations, expect the market to go down, and if it doesn't go down, and there's actually some good news comes out, those people will flip. They'll flip from bearish to neutral, and then from neutral to bullish, okay? And look at this. I mean, you haven't seen this since 2016. Look at that. I mean, these are worse numbers on bullish sentiment than we had in Rona. Think about that for a moment. For the next 6 months, as of February 16th week, there was less than 20%, less than 1 out of 5 people were bullish on the market as far as investors goes. That is nothing short of ridiculous, okay? It should almost never be like that. And like I said, it wasn't even like that during the Rona crash. Like, that's just crazy. And so right now we're in a market that the sentiment is so unbelievably bearish for the next 6 months. It's pretty darn epic. And it's just hard to find people that are really bullish in this market right now. And as a contrarian, that's exactly the type of market that I love to buy into. I love to buy into when a market where we got all this fear. And fear, do we have fear on top of fear right now? We've got a real wall of worry that's in front of our face right now, right? It starts off with inflation, then it moves on to the Fed, because obviously, the Fed's going to raise rates. We all know that. The question is, how many times is the Fed going to raise rates? Is it 3 times, 4 times, 5 times, 7 times, 9 times? I saw some Wall Street banks have the Fed raising rates 9 times over the next 12 months, which is just crazy, okay? But nonetheless, we all know the Fed's going to raise. It's just how aggressively do they raise. You had a lot of companies that were the high flyers the past 2 years that have given no forecast for 22 or given troubling forecasts. I'm speaking about Netflix. I'm speaking about Meta. I'm speaking about PayPal. I'm speaking about Shopify. All those sorts of companies gave either a weak forecast or no forecast, and that worries the stock market, right? When companies aren't really guiding out forecasts for the most part, right? Now, on the flip side, by the way, very recently, over the past 24 hours, we got 2 really good forecasts. One was out of Target, one was out of Nordstrom, but no one pays attention to those. Those aren't big companies like the big techs, right? Valuations got really rich on large caps. Those came down quite a bit. I'll show you that in just a moment. Obviously, Russia's forefront right now. This is worldwide news on everywhere you go. You can't miss Russia right now. So this is obviously a massive holdback of the market right now. Then you had worries about GDP growth. You had worries about a lot of retail investors got wrecked, so they might not come back to the market. And so right now, we've got a giant wall of worry right in front of us, which explains why all of the investors are so bearish on the market the next 6 months, because they're looking at this wall of worry and then like, what do we have to go off of positive, right? What you must understand, though, is with the wall of worry, as you start to destroy the wall of worry brick by brick, the sun comes out and things are then, again, beautiful. And sometimes in a market at a given time, right, people start thinking, what's going on in front of me must be all that's going on or something like that, right? And they don't realize how many worries we had over time. This one just looks at March of 2009 through basically 2009 through 2019, that entire decade, right? And you had so many reasons to sell throughout this time period. I mean, and for folks that were in the market during this time, you remember these U.S. stocks fall 20%, a taper tantrum. I mean, every one of these was headline news on CNBC. They talked about it for days, weeks, or months, every single time. All these were like a massive, massive deal. Look at this. Dow falls 1,175 points, biggest point decline ever. Every single one of these was just a huge buy the dip opportunity. You always get these, just horrible things that freak the market out in the short term, and sometimes for good reason, but at the end of the day, it doesn't add up to much. If we look back at the course of my life, right? I was born in 1989, and we look back at the course of my life, we've had a lot of reasons to sell stocks over time, right? U.S. savings and loan crisis happened around the time I was born. Tokyo stock market crash, the Gulf War, UK went into recession, Black Wednesday. Wow. Some of these events are just crazy. Y2K. Oh, I remember that Y2K. Oh gosh. The .com bubble, 9/11. I mean, my gosh, does it get bigger than that? Multiple, basically, what's. You look at all these different things. Then you had obviously the Great Recession. Man, was that a time to sell for a lot of folks, right? You BP oil spill, Greek debt crisis. Just thing after thing after thing. Trade wars, Rona, and then obviously recently it's Russia, it's a Fed, it's inflation, it's divided politics. Like I don't think we've been this divided politically in this country since at least in the past 100 years. I mean, it's just extraordinary how extreme a lot of folks on both sides have gotten, and how divided this country has really gotten politically. It's always been split, but the split is definitely, I feel like, probably worse than it's been probably in the past 100 years. So when you look at all these different scenarios, every single one was just a huge a sell stocks in that time period. But actually, every single time the market fell big, it was a time to buy every single time. And that was even in scenarios where it made a lot of sense for stocks to fall big, right? And every single time you should have been buying as the market was going down. Every single time. The global financial crisis, that was the closest thing we had to a Great Depression in this country. And for the worldwide economy, I mean, you had banks collapsing. You had the entire financial system almost go under. Like nothing like that's happened since the Great Depression. And I think sometimes we lose sight of that. We forget it just because, as time goes on, you forget these things. But that was insanely serious. A once in 100-year health event that shut down the global economy for a given amount of time, that was ridiculously scary. And so you go through these time periods that this really, really darn scary. But every single time, this doesn't even include dividends reinvested right over that time. But every single time, it's a huge buy the dip opportunity. Every single time. And always remember, slides like this, because I think they're very, very important. Now, where have I been putting my money the past 6 months or so, or even 6+ months, right? Well, I've been putting my money into small caps for the most part. 90% plus of stocks I've been buying are small cap related. And for the small caps, one thing I know is this is completely unsustainable. Now, when you're in an unsustainable market, and so here's what we're looking at. It's forward Ps for S&P 600 small cap stocks, right? And basically, there's only a few time periods we've ever been trading, around this range. One was after the tech bubble happened, so around 02, 03 range, right? One was in the Great Recession, during the depths of the Great Recession. One was around 2011-ish. We almost reached down here in December of 2018, and right now. Okay, and that's for the last 20 plus years of being in the stock market. So when this is completely unsustainable. We need to trade into more of a 16 to 18 range. That's where we need to trade at. And here's some food for thought. Okay, every single time the market gets extremely in unsustainable levels, buy. Okay, if it's on the low side, and if it's goes insanely high on the high side, then that usually means sell. The market can only stay unsustainable for so long. And whether that's unsustainably low or unsustainably high, sometimes it can stay like that for 6 months, 12 months, maybe 18 months. But ultimately, it's usually like a 3 to 12 month, basically situation you have play out. And then it has to come to in line. And so if that means it's way overvalued, the market has to come down. If it's way undervalued, the market has to come up. One of those two things has to happen depending upon if you're in an unsustainably low market or unsustainably high market. And so when I look at it, small cap stocks are just trading at ridiculously low valuations right now, it doesn't make any dang sense, and they will come up. And they will come up pretty fast. And it's just a question of what day does it start to happen? And, I think there's some data. I'm going to show you some data here in just a moment. I think it's already starting to happen. It's just people aren't even catching on to it yet. But what you do know is this whole situation is not sustainable. And things will come back to in line. And then next thing you know, we'll be trading somewhere in the 17, 18 range in a year or two from now where we should be at. But 13 is just not, okay? Especially in this sort of inflation environment, it would be one thing if you could make an argument that it's like, well, you could put your money in a savings account and get 8% or something like that. Then it would be like, okay, I can understand. But no, not in this sort of environment right now. No, also good news is large caps have been falling recently. Now, large caps are still trading rich. This is important. So although large caps have fallen, they are still trading rich. Rich meaning at upper ranges of valuation where you very rarely see them at. So good news is we're nowhere even close to here. So this is good news that large caps are coming down, but you can make a strong argument that large caps should come down a little bit more, maybe another 5 to 10% type drop. So then you're somewhere roughly maybe in here, which would kind of make sense. Now, the thought process on that could be, well, if large caps fall more, wouldn't that pull down small caps, right? And conventional wisdom would tell you that would be the situation. And in many markets, that is the situation, except when you're entering into potentially a bear market or out of a potentially a bear market, right? And sometimes that doesn't always play out. So look at this here. The Dow Jones Industrial Average, so the largest of the large companies out there, Dow 30, right? This is down almost 5% in the past 1 month. That's a huge decline in a 1 month. The S&P 500 is down 4.4% in the past 1 month. Another massive down move. You don't see the S&P 500 down almost 4.4% very often on a 1 month. The NASDAQ 100 is down 4.6% in the past 1 month. Those moves are all massive. Now, if you thought about this for a moment and I told you that, right? And I asked you, what is the Russell down in the past 1 month? I think most folks that are investors, even educated investors, if they weren't keeping up with the market, and that's all the data I gave them, I think most would say, okay, the Russell's probably down 6%, at least 5%, but probably 6% or 7%. Because, all the other indexes are down, the Russell's probably going to usually perform better than the markets perform or worse than the markets perform. But what's the truth around that? Well, the Russell is not only not down, it is up 1.45% in the past 1 month. So here we are at a complete divergence in the market where the big guys are having a lot of trouble, and the Russell leaded everybody to the market fall essentially, right? And now all the big guys are falling, and who's leading things out is the Russell. And you're talking about 5%, almost 6% outperformance of the Russell index, the small caps, versus the others. If that's not a clear sign that there's things going on underlying in the market, then I don't know what is, because this is not by chance, and it's not by a small number. That's the best part. It's like, it'd be one thing if the Russell was just doing a little bit better than the other indexes, but when you start talking about a 5 to 6% type number on an index on a 1 month span, there's a lot more than meets the eye in that type of situation. And so nonetheless, money is starting to rotate and just starting to come into the Russell. And the thing with this is this isn't going to just be a 1 week or 1 month type thing. This is going to be likely a multi-month, if not multi-year play, where money will funnel into the Russell and Russell and Russell. That won't be ending anytime soon. And as we get the wall of worry destroyed over the next, let's call it 6 to 9 months, that's going to create a situation where the Russell is going to likely outperform the other indexes, and I think by probably quite a considerable margin. Now, in terms of me personally, where have I been buying? What type of stocks have I been buying, right? Well, I've been buying companies like Tattooed Chef, companies like Corsair Gaming, companies like Oatly, companies like Honest, companies like Planet. That's where I've been putting a lot of money in this market. I've even been buying some, I just bought some call options yesterday on a lot of these stocks you're seeing there that expire in 2024, okay? And, why am I the most heavily invested since December of 2018? is when it comes to, percentage of my money, right? And of course, I always have margin. Like I have 7 figures of margin I could use if I wanted to, but I'm trying to not use that margin unless the market really had a major like meltdown where like all the indexes went down 20% or some crazy event like that, like a, let's call it like a mini financial crisis, right? But that I don't really consider like money that's, out there. I usually consider it like cash, right? It could be money in savings accounts, checking accounts, things like that versus what I have invested. And why am I the heaviest? I've been invested because I look at all those sorts of stocks, right? And I say, okay, small caps are insanely undervalued right now. We know money's going to likely flood into those stocks, right? A lot of these stocks never got to build their shareholder bases out because, they went public at a time when it was kind of in a euphoric market. So they never really got to build that long-term shareholder base out. And then right away, it was a retail flood out of the market and Russell got absolutely devastated all at the same time. So these stocks never got to build their real shareholder bases out. They're gonna. And all the stocks I'm investing in all have amazing stories and revenue growth opportunities over the next 5 years. Now, a lot of those stocks have growth much past 5 years, like 10 years, 15 years, 20 years. But I usually like to focus over the next 5 years. And all the stocks I'm investing in, they all have tremendous stories for the next 5 years and tremendous revenue growth opportunities, net income opportunities over the next 5 years. And so I look at the market and I say, this is where my opportunity is. And for me to sit on my hands in this sort of market where you have the most fear we've had in the market in a long time, when you have VIX insanely high, when you have small cap stocks trading unsustainably low, I can't sit on my hands in that sort of market. I have to invest aggressively. That is the name of the game for me. And if I'm wrong and we go through a massive financial crisis type meltdown, then that is what it is. I am always willing to accept the outlier event, right? WW3, if that was to happen, whatever, right? I'm always willing to accept the outlier event and I'll handle that situation if we get that situation. But a lot of times as an investor, you got to understand these things are always a possibility. And that's just a world you have to invest in. Recessions are part of the game. Situations like we have right now around the world, that's part of this. That will never not be part of this. We're always going to have those things happen. Even what happened in 2020, like that's going to happen, right? And so I invest based upon what I have in front of me and where my best opportunities are. And that's where I see the opportunities. And that's why I'm the most heavily invested I have been since December of 2018. And that's just it, guys. So hope you enjoyed this video as always. Thanks so much for joining me. Much love as always. Make sure to subscribe to the channel. Also get some free stocks from Moo. It's basically like getting free money. Okay. Check out pinned comment down there, set up an account, and even get a free TTCF share with a $100 deposit. It doesn't get much better than that. Much love and have a great day.